Welcome back, dear learners. Before the ad break, we managed to prepare a Creditors Allowances journal and we posted it to the General Ledger. Now, we're going to prepare again another one and then we post to the Creditors Ledger. The transactions reads as follows. The first one, return damaged goods to T Noah, 1,780 in debit note number 16. We need somewhere to record this. Let's see if we have it. There it is, our Creditors Allowances journal. So the first thing that we record is the document. Here we're told it's a debit note number 16. So it will be 16 here. The day will be the first. The creditor is T Noah. And then under creditors control, it's going to be 1,780 returned damaged goods. So it is part of our trading stock, 1,780 under trading stock. The next one on the 5th reads, claimed an allowance from A. Jaffa for an overcharge on stationery, 1,350. So my document number is going to be 17 and the day is on the 5th. The name is A. Jaffa and the amount is 1,350. But here we claimed an allowance for an overcharge on stationery. So I need a column for stationery, which I don't have. So I'll come to sundry accounts, 1,350, and then I'll say stationery. The next transaction, dear learners, is on the 16th. And then my document will be 18. And then it reads, equipment bought from B. Ever was faulty. We returned it together with a debit note for 16,000. B. Ever comes here. How much was it for? 16,000. What was this? Equipment. So come to my sundry accounts, 16,000 equipment. There it is. The next transaction is on the 21st. My document therefore becomes 19 on the 21st. Packing materials to the value of 1,880 bought from T. Noah was damaged. It was returned with a debit note. I'll come here. I have my T. Noah. And then the amount is 1,880. And then what was that for? It was for packing materials. So I'll come to my packing materials, 1,880. And the last transaction reads, issued a debit note to A. Jaffa to claim for a trade discount not allowed on an earlier purchase transaction for 780. Document is 20. The day is the 28th. And then I'll now say here, it is A. Jaffa. And the amount is 780. And the debit note was for a trade discount that was not allowed on a purchase. That means we're coming here and we say 780 under my trading stock. Let's quickly add this up. So my total here is going to be 21,790, and under trading stock is 2,560, packing materials 1,880, and lastly sundry accounts 17,350. Let us now see how can we post these amounts to the creditors ledger. So what we are given is our creditors allowances journal, which is what you can see over here. And we also have the list of balances that we're going to use. Let us start with T. Noah. T. Noah on the first, we say accounts rendered. Accounts rendered. This is where we bring the balance that we are owing to T. Noah. And the amount is 12,200. You have my 12,200. I'm just putting my balances. I also have a balance for, okay, let me just take that off. Then I'm going to quickly come back. All right, we were busy with T. Noah. with A Jaffa rather. A Jaffa. And on the first, we have accounts rendered. Accounts rendered. And the amount is 14,500. The last one is be ever. On the first, accounts rendered. Accounts rendered. There is my accounts rendered. And then the amount is 89,500. Now, let us post now from the Creditors Allowances Journal. On the first day, we have T Noah, and the amount is 1,780. So we're coming to T Noah. We're going to say on the first, and we're going to have a debit note. Here is my debit note, and debit note number, you see the number here, 16. And then my debit note comes to the debit side, which is the minus, remember that? So I'm going to come here and say 1,780. With your calculator, you now say 12,200 minus 1,780. You should get 10,420. The next one becomes on the 5th, A Jafar. And then we'll come here, we say on the 5th, we also have a debit note. And the debit note is number 17. Debit side, it's a minus. And we're having 1,350. So it's going to be 14,500 minus 1,350. You should get 13,150. So I'm going to post the next transaction, which is on the 16th. Be ever. Here will come. I have my 16. And I'll say debit note. I have my debit note. And it is debit note number. You can see it already here for Be ever. Number 18. Debit note 18. And that is for 16,000. On the debit side, 89,500 minus 16,000. That will give you 73,500. The next one on the 19th, okay, on the 21st rather, to T Noah. On the 21st, so I'm coming here and I'll say 21 here. It is another debit note, and it is debit note number 19. Here is 19. How much was that for? 1,880. You will now say 10,420 minus 1,880, and you will get an amount which is 8,540. And then the last one becomes on the 28th, A Jafar. So come here, 28. It is a debit note number 20, and the amount is 780. 13,150 minus 780, 12,370. This is how you would do it. We are now going to see the effect of these transactions on the accounting equation. The first one says, returned damaged goods to T Noah, 1,780. Which account we debit? Once it's an allowance, we're going to debit our creditors control. So here it will be creditors control because it is an allowance. Once you debit creditors control, you're coming to your liabilities and you're saying minus 1,780. What other account was involved here? These are damaged goods. So trading stock, account credit, trading stock. And the moment you credit your trading stock, your assets are going to decrease 1,780. Owner's equity, no effect, then you put a 0. On the 17th, we claimed an allowance from A Jaffa for an overcharge on stationery 1,350. All right? So already we know which account do we debit? Creditors control. And once I debit creditors control, what happens to my liabilities? Decrease, minus 1,350. Which account is involved again? The second account, stationery. So I'm coming here to credit stationery. Stationery is an expense. That means it affects my honest equity. My honest equity is going to increase now, plus 1,350. Assets, no effect. On the 18th, equipment bought from B Ever was faulty. We returned it with a debit note. Which account do I debit? Creditors control. Creditors control. And then my liabilities definitely will decrease by 16,000. The second account involved here is equipment. I will credit my equipment. Equipment is an asset. I'll come here and say minus 16,000. Honest equity, no effect. On the 19th, packing materials to the value of 1,880 bought from T. Noah was damaged and returned with a debit note. Account debit, it is your creditor's control. And we now know once I debit my creditor's control, my liabilities decrease 1,880. And the second account involved here is packing materials. So I'll credit packing materials. Once I credit packing materials, which is an expense, my honest equity is increasing, plus 1,880. Assets, no effect. The 20th, we issued a debit note to A. Jaffa to claim for trade discount, not allowed on an earlier purchase transaction, 780. We now know account debit, definitely your creditors control. And we already know once I debit creditors control, what happens to your liabilities? They decrease, minus 780. What is the next one now? The second account involved. This is on an earlier purchase transaction, so we had purchased trading stock. So I'm saying trading stock. Trading stock is an asset. Once we credit an asset, we're coming to say minus 780. No effect on the honest equity. Dear learners, we're going to go for an ad break, and I'm going to see you in a short while.